Good evening, my dear students. How you feel today? CM Strategic Cost Management CMA final question paper. Express your opinion as a comment. Now, the purpose of this video is I want to share my opinion on today's question paper, that is Strategic Cost Management December 2024 attempt. Now, as usual, the first session is reserved for MCQs. Now, 15 MCQs, each one carry will 2 marks. Now, if you see the MCQs, majority of the MCQs means not majority, 90% of the MCQs are practical based, application based MCQs. Now, the first one is regarding the first chapter, introduction to the strategic cost management, and second one is regarding, which is a simple one, basics of the marginal costing, which is a practical application base. And third one, which one of the following is the quality cost is incurred with inferior products are delivered to the customers. Now, types of quality cost. In these types of quality cost, you have to choose the best quality cost which is suitable for inferior products are delivered to the customers. Now, the purpose of this video is just I am explaining and I want to share my opinion only. I am not answering any question. Now, the fourth MCQ, which is through from the chapter throughput accounting. Throughput, what is the form of throughput contribution? Sales minus material cost only. Now here, they're given here the throughput accounting, they operate under the throughput accounting and information is given, selling price, material cost and conversion cost, and the time taken on the bottleneck resource is 10 minutes. What will be the return per hour? First, you have to calculate the return per 1 unit and they have to multiply with 60 minutes. Then you have to calculate return per hour. That is the highlight point. Fifth MCQ. In a factory, this MCQ is came from standard costing system. In a factory where a standard costing system is followed, the production department consumes 1100 kgs of raw material at the rate of 8 per kg of product X, resulting in material price variance 2200 favorable and material usage variance is 1000 adverse. Now, what is the standard material cost of, what is the standard material cost of actual production of material product X? Now, this is also straight MCQ only. There is nothing twist in that. You have to just 1 to 2 minutes it will take to solve this problem. Now, sixth one, target costing. By using marginal costing technique, you can solve, you directly use this target costing, target selling price. Now, the highlight of this problem is the contribution is given. How much the contribution means? 3/4 of the variable cost. Assume the variable cost is X and the contribution is 3/4 by X. Now, the total contribution is profit plus fixed cost. 1,80,000 is the total contribution, which is equal to 3/4 of X. By using that, we can find out the variable cost, and by using that variable cost, we can easily find out the selling price. And the seventh MCQ is regarding maxima and minima. By using differentiation technique, you can find out this. This is the direct one only. And the eighth one is from activity based costing, which is a very simple MCQ. There is a one personal department is there. The personal department cost they incur the 2 lakhs as a overhead because of new hiring. The driver is also they mentioned here new hires. Because of this new hires, we are incurring this 2 lakhs cost. Now, 2 lakhs divided by 25, we will get the cost driver rate. By using that cost driver rate, how much you charge to the A? What will be the cost will be allocated to department A? Now, you can easily find out that. This is also very easy. Now, optimistic and pessimistic time is given. Now, they are asking you variance of the duration. Now, very simple. Yes or no? Now, by using variance formula, TP minus TO divided by 6 whole square, you can easily find out this, what is the duration, which is the basic, hardly less than 1 minute it will take. Now, come to here. The normal duration and normal cost of an activity is 12 days. And the normal cost is 400 rupees. After crashing, the cost will be 560. How much of the extra cost incurred? 160. Total cost per the slope is 80 per day. 160 means 2 days. The crash days possible is only the 2 days. After crashing, the duration will be 10. Now, here the logic is simple. Who know the crashing concept, they can easily solve this problem, which is a MCQ base. And next one is OM related theory based MCQ. Which one of the following is not a spreadsheet? Scriptends is related to the programming language. All these two MCQs are came from data analytic tools. And now come to here. Lonax, a manufacturing company, has developed a new product and just completed the manufacturing for the first 16 units. Now this first they completed 16 units. If the first unit will take 6 hours to manufacture and first unit takes 6 hours to manufacture and the first 16 units will take 62.986 hours to produce, then what is the learning rate? Now 2 double 4 4 double 8 8 double 60 16 double 32 32 double 64. Now yes, it is in double only. Now time into time taken by the first unit into learning curve. By using the trial and error, you can easily find out that what is the learning rate. This is also direct easy MCQ. Simple exponential smoothing forecasting to give higher weightage to recent demand information. The smoothing constant must be close to. Now this is regarding the simulation, this is regarding the business forecasting model, which is the VC only. Now as usual, the first one is 2A is from marginal, decision involving various alternatives. By using the marginal costing technique, we can usually find out this. Now here the problem is little bit lengthy. In order to solve this problem, it will take more than 1 hour. Yes, you are listening correct only, which is for 14 marks. Now my point of view, it is better to solve this problem at last. Then come to 3A. 3A is always the 3A is reserved for the transfer pricing. Now there is no twist in this, except the second requirement is little bit confused. But regarding the first requirement, this is only the simple. Here the two divisions are there, division M and division N. Division M selling the goods 50,000 to outsiders and 10,000 units to N, internal transfer. Now both these division M, both transfer is at the 25 rupees only, but the division N manager, they feel that the transfer price is very high. So he requesting to the division M to reduce the transfer price for 22 rupees. Now they are asking you whether it is the reduction is the best or not. Now if you come to the division M performance is evaluated based on the ROI, return on investment. So how can I solve means, first you have to calculate the ROI before, first you have to calculate the ROI when the selling price is 25 rupees. When the selling price is reduced to 22, internal transfer price is reduced to 22, then what is ROI? If any reduction in ROI, then not accept that. Now if not selling the goods to division N, then at that time what is the ROI? You can calculate that. So how can I find the ROI? Profit divided by return on investment. Now this is a very very easy problem only, transfer pricing, which is 7 marks. Now this 3B, one of the easiest problem. Now sir, which operation? Decision involving decision making using probabilities. Now how can I find out the break even point? Simple, contribution divided fixed cost divided by contribution per unit, we can directly calculate it here. And second one, how many units can sold to earn the 6 lakhs profit or loss 5 lakhs, and based on sales forecast identify the probability can break even. So how can you find out the break even? As it is problem which is in masterminds material also. Now you have to multiply quantity into probability, we will get the expected sale volume. Now after that, what is the probability of crossing the break even? By adding this probability, we will get this. Now which is for 7 marks. Then come to here. This problem is also in masterminds material, which is a very very easy problem. 4A. Antox Limited, which is this problem is came from activity based costing, which is a basic problem, nothing fished in this, 7 marks. First we have to find out the cost per unit under absorption costing, and thereafter cost driver rate. How you find the cost driver rate? Cost pool divided by cost driver, we will get the cost driver. By using this cost driver rate, we have to find out the cost per batch. This is value chain analysis, introduction of the introduction of the SEM for 7 marks. Then come to 5, which is 14 marks. Sir, this problem is also in Masterminds material. Now here, this is just regarding the problem standard costing. We have to find out the material variances, labor variance. The beautifulness of this labor variances, here there is an ideal time is there, so efficiency variance will affect, and variable overheads and fixed overheads. Now the first one is you have to find out the material, wages, variable, fixed overhead and sales variances. Thereafter that you have to reconcile the budgeted actual profit with standard profit. How many marks? 14 marks. Now this is a lengthy problem, I agree with that. Now this problem and marginal costing problem, there is a decision involving various alternatives. These two problems will take more time to solve in the examination. My suggestion is you have two questions as a choice. No sir, this is a very easy problem. Yes, I am agreeing, then it is better to solve at last. Why? Because if you solve this type of problems at the starting only, it will kill your time, valuable time. Now there is nothing in which. Now come to our next very interesting concept, OM. DM, nothing but quantitative techniques which are used in decision making. Now 6A, which is a traveling salesman problem. Here this is an expected problem only, nothing twist in this problem, and there is no unexpected thing happen in this question paper. Now 6A which is a institute favorite question, salesman problem. This as it is problem which is in our masterminds material also, and also assignment problems. Traveling salesman problem, direct question, 7 marks. And the 6B, this problem is from simulation. As it is problem is in our masterminds material assignments also. Now same bakery problem. If you see yesterday's day before strategy, I discussed regarding this concept also. Bakery problem, salesman problem, crashing problem, I already discussed in the previous day strategy. Now here also there is no twist here, just which is by using your common sense you can solve this question as it is, 7 marks. Now come to your 7th question. Now this is the problem framed on the crashing. This is also 14 marks, which is a very easy. There is nothing twist, nothing twist. Now the first one is project network diagram, critical path and critical path normal duration, and thereafter you have to crash to 21 days. Now this is the direct problem which is the masterminds material, 14 marks, which this is I predicted in day before strategy. All these problems I discuss in marathon session also as it is problem. If go and verify. This 8A is unexpected. I think there may be a 2 or 4 marks question will ask in MCQ, but this time the easy problem. This problem is also in MM material. Now says the optimal strategy of 2 firms and assess the value of the game, 7 marks. They will ask for 7 marks. I never assume that, but this is a benefit to you, my dear students. The 7 marks, less time, more marks. This is one of the best one. And 8B, business forecasting models, seasonal index. If you see yesterday's day before strategy, I discussed regarding this concept. This is a estimated question only, 7 marks, which is tried question in masterminds material. Nothing change in values also. I am telling that nothing change in values also. Now in my point of view, overall point of view, it is little bit lengthy, but little bit it is a time taken, but overall the paper is very good, very good. Now all the best, my dear student. All the best for next exam. Have a nice day.